Well, welcome back. You're with us here on Muhurat Programming. And I mean, if you've joining us just now, here's wishing all of you, your families, a very happy, healthy, prosperous Diwali from all of us here at CNBC TV 18. You heard sort of Ramesh Damani earlier, basically telling us that expect new highs in the market in short order, his words, not mine. Let's get some more perspective in. Atul Suri of Marathon Trends is here in our studios. Atul, it's a pleasure. Great to have you with us here. Happy Diwali.
Awesome. Thanks a lot.
Thanks so much you could make it today.
Definitely.
And Samir Arora of Helios Capital is also joining in. Samir, it's a pleasure. Thank you very much. Great to have you with us here. Happy Diwali from all of us here. To you, your family, your team. Thank you so much. Samir,
Happy Diwali to everyone, to the viewers. Yes.
Sorry, what is that background, Samir? Is that Singapore? That is...
Yeah, it's Singapore. I got a new background for you because otherwise all the old boring background you have seen.
It's looking festive. It's looking lit up. It's looking Diwali. So, perfect.
But Samir, tell us, how are the card parties in Singapore?
No,
I'm sure this year it must be full-blown.
Yeah, but I walk out by the time these guys start card parties because I am used to bigger levels of speculation in my market. So I don't like these. Seriously, I don't play. They just look trivial to me.
Okay. Teen patti or...
But that's what, fund manager makes you... I don't
Sonia's a cards person.
I've never played a single game, but nowadays, I mean, this year it's been full-blown, right? The kind of celebrations. But Samir, how are you feeling about the markets? I mean, things have been rollicking, and we were just discussing how Atul has a very aggressive target. Atul, what's your target? 21,000 on the Nifty?
That's not very aggressive, 22%.
22% upside. Samir, are you in the same boat?
I am in similar group in the sense it depends on how many days or months he has for this target. But in 1 year, if we can outperform China 8% in a day sort of today.
Oh, wow.
So you can imagine where India is relative to our peer group. And I think India will do well. We just need the world to stabilize. And I think the US is already a little bit stabilizing, but definitely in next 2-3 months it will. And then all these targets can be met plus minus 6-8 months.
Okay, all right, Samir, hang on. Atul, first of all, greetings, season's greetings to you, your family. Thanks for coming down. Well, 21,500, and you're saying it's not very aggressive. I mean,
see, Nigel, what happens is that if you look at the year gone by, India has probably been one of the best performing markets.
Absolutely.
And I've always believed that stocks that fall less in falling markets are leaders of the next bull market. So if you look at the year gone by, I mean, barring, I think, Saudi and Israel, due to specific reasons, India has done very, very well.
Right.
So I think that we are not very far from lifetime highs, which is what, 4% or so from there.
Right.
Number two is that when I look at the composition, the sectors that are participating, they are very different from what has led the market or supported the market for last 10 years. It's not those export-oriented, defensive kind of plays. Last quarter, I got very, very bullish on capital goods. And I think when capital goods move, it is signaling to a bigger industrial play. If you look at the banking results, especially the industrial-facing banks, we are work in progress, you'll find the kind of numbers that are playing out. And what makes me most bullish, of course, that's predictive, is the way commodities are going. One big problem for a lot of Indian corporates is the pressure, margin pressures. But when I look at commodities, I look at crude. I mean, let's look at that. It's around 90, 91, Brent or thereabouts. I personally think that it will be substantially low and people will be shocked. So I think that things are playing out for India. We have relatively fallen less, but as things stabilize globally, and globally, mind you, the oversold nature, the readings that I see, whether it's S&P 500, are almost something you saw at 2008 bottoms or 2020 bottoms. So I don't think markets are going to really again, crash out from here. Even if markets stabilize, play out slowly, it's not going to be V-shaped. What we are used to seeing in a decade, because we don't have that flush of liquidity coming. We will be 2 steps forward, 1 step back. It will be calibrated. But I think that India will relatively outperform.
Atul, but if you're going to head higher, and as you said, the industrials, CapEx theme as well is coming back to life, the banks have to perform. Do you have a target on the Nifty Bank itself?
No, I think that we could see around a 20. See, as I said, it's a 22% kind of move on the Nifty. I think it's around 26 or so. Percent. So there is a 4% outperformance. But again, even in banking, I feel, Nigel, this is not going to be a year of across the board, all sectors. As I said, it's not a liquidity gush. Globally, when money is going to be tight, you're going to be choosy. Whether it is going to be at a macro, at a country level, Not all countries are going to do well. Just as Samir pointed out, look what happened to Hong Kong today. You know, it's in a different space altogether. It's a different global market. I think even industries are going to be very, very differentiated. And even among industries, stocks are going to behave differently. So in a time when there was plenty of liquidity, like the ETF kind of play, everything went up. I think that this is going to be the year when managed funds or active fund managers are going to far, far outperform the indices.
The era of ETFs and passive.
I think so. I think the swing is going to happen
The other
towards
side,
active managers.
active fund management, discerning. Samir, sorry, just to pick up on China, you're closer to China than we are also. I mean, in terms of geography, where you are. What happened? You know, President Xi was president last week. He's president now, but markets don't like it. So the question...
Well, they don't like the style.
Yeah. No, is it relevant for India? Is it going to accelerate this TINA sentiment amongst foreign investors within emerging markets in a positive way for India? Yeah.
So, you know, I wrote in my last letter to these guys that people who are putting money into China are the sort of the best example of the Stockholm syndrome, where you fall in love with your kidnapper or the guy who's abusing you and manipulating you. Because the performance that they've had, since 1992, the returns are negative. And today, I think Hong Kong is at 15-year low. So first of all, you can also imagine when we say invest for the long term and time is important, you can be in markets like Japan in the 90s or in Hong Kong for the last 15 years or China since 1992. So never think that everything is so straightforward. But it is India's time right now because of the frustration and the pain that people would have had in China. And in the end of the day, these fund managers don't say that, oh, we don't like China, so we'll return the money. They will find another story. And the story that fits right now beautifully is India, because it is A, benefiting from the China plus one, both from corporates and from investors, and B, doing well on its own, and C, having dealt with dignity this year the flows of foreign investors. So whenever the foreign investors come back, and I think they will come back by Jan, Feb, because New Year always makes them, you know, reset their allocations and all that. And by that time, the US interest rates would be out of the way. And then we can perform in absolute what this year we have done in relative terms.
So we're trying to get a lot of themes out of our, our market guests, right, Samir? And one thing that we've noticed is that a lot of people are now going contra on IT stocks. So Ramesh Damani was just telling us a while back. And to be fair, this month has been good for IT. I mean, HCL Tech, Infosys are all up about 10% this month. Do you think this is the space to be for the next
No, I don't
months?
think so. And by the way, you didn't hear Ramesh fully saying if you want a 5 to 7 year story, well, I'm interested in a 1 to 3 year story first, and then I'll go for 5 to 7. So simultaneously, we can't say that India will outperform and India is doing well and India is ahead of every other market, and say that then we'll choose a sector which is most linked to those markets. So when we separately say that India is in a better situation relatively because we have less interaction with the world, we have less supply chain, we have less this, then we should seek stocks which are more related to those themes. So we are, if India goes up 22%, everything will do well. But if the market goes up 22, then unfortunately fund managers have to go up 25 or at least whatever. So therefore, we have to look for relative performers. And I think that also, if you look at this year, I mean, this month, people were looking at last quarter's results and saying those results were very good. Obviously, nobody's saying that the US has slowed down right now. The whole story is that the US has not slowed down, but the Federal Reserve thinks it should slow down so that inflation can be brought under control. Therefore, looking at last quarter has absolutely no connection with what the sort of the bet is in some sense. But in any case, I think everybody does well. Everything might do well if the market is up. But we think that non-IT will do better than IT.
All right, non-IT will do better. By the way, there may be Diwali lights in 10 Downing Street as well, London, right? I think the news is coming in just now that Rishi Sunak is confirmed to be the next Prime Minister of UK. And this is after, I mean, there was a candidate called Penny Mordaunt who withdrew from the Conservative Party leadership contest. The former Prime Minister Boris Johnson, of course, withdrew. And now it leaves Rishi Sunak right there. as the man for the top job in the UK. I mean, I think he's perceived in a pretty good way by he's considered market-friendly, fiscally responsible. I mean, all of the right things. He checks all the boxes. And maybe this now puts this entire UK saga, and what a saga it has been, last month and a half or so, right?
3 leaders in what, less than 2 months,
No,
right?
and the markets, right? I mean, they've been absolutely the bond market in the UK, the currency. It's obviously not had too much contagion impact, but maybe some stability. Samir, any thoughts quickly?
The thought says, let's call him an Indian, even though he's basically from Africa or wherever his parents. But the thing is, if you look at India, this Diwali is really going well. Yesterday, we defeated Pakistan. Today, we beat China by 8% in a day. An Indian origin fellow has become UK Prime Minister. It's a good start.
Okay, so British Asian, right, as he calls himself. So you want to rechristen him. But I mean, he's a former hedge fund boss, so I guess he'll know what to do with the economic crisis in UK at least. We can hope for that.
That is assuming that hedge fund bosses know what to do.
Hedge fund guys are quite smart.
I mean, that's a big one.
That's tongue-in-cheek, Samir.
Oh, no offense taken, Samir, for you. But Atul, how are you feeling about some of these spaces, right? I mean, we spoke about banks, IT.
Absolutely.
The big trade last year was go short on IT and go long on banks. What's
Right.
the big trade next year?
No, I think that things have been evolving. You know, I feel that one theme, right, it's been my favorite for, I think, since 2020 has been specialty chemicals. And I think it's still playing out. I think it's a big mega trend. I've been telling people just as IT was a renaissance industry, I think this sector is going to play out. And the way I see commodity prices correcting, I think that the margin pressures we are seeing in the short term, which should get elevated. I think last quarter, capital goods really played out and became an overweight theme. I would say industry-facing banks is what's really working out. And we have selective exposure to defense. Ramesh spoke about it earlier. I think that also has done very well. So again, it seems that the portfolio is more domestic-facing.
Yeah.
And you know, sectors like IT and pharma, which really dominated 2021, have actually been underweight. So it seems to be more internal growth. Even some of the consumption stocks are doing very well. So the portfolio is changing. The themes are more domestic than global. And that's what the results are pointing out. That's what leadership is pointing out. That's what prices are pointing out. So I guess that's where we are, because ultimately we are there to play the trends. As Samir said, you know, 5 years, 7 years, it's nice to talk about. But as portfolio managers, it's 1 year and 2 years. And that's a reality, because that's what most of the clients want.
Atul, if you could squeeze in a couple of names as well. Specialty chemicals has done phenomenally, in the last couple of years or so. Some of them have come off the top. But as you say, that's the big trend, and there's plenty of headroom out there. You want to squeeze in a couple of names in there?
I would avoid because of compliance issues, and, you know, Nigel, they're a part of my portfolio.
Okay.
But I feel that there are a lot of plays. I mean, defense, you know, there are just a handful of names there. I think that looks very interesting. And they still are very cheap after having almost moved up. And it's not just about indigenization at India level. If you look at the globe, post this Russia-Ukraine thing, countries are understanding they need to have self-sufficiency as far as defense, equipment, production goes. And I think India's playing out very well.
All right. Well, Samir and Atul, thank you so much for
Thanks a
joining
lot,
us and taking the time out this Diwali to speak to CNBC TV18. Hope you folks and your families have the best year yet. We've been through challenging times, right? All of us together. I think for the last, 2 decades, we've been speaking to each other, and we've been through anything and everything, whether it was a recession, a war, and here we are, sitting well and healthy, and hope that continues for the days to come. Thanks a lot, folks.
Thank you very much. Happy Diwali.
Happy Diwali. All right, let's take a quick break. On the other side, we'll be back more on the markets, which are doing exceptionally well, and somewhat 2079 getting off with a big bang.